Patrick, welcome to the show today.
Thanks. I'm really excited to be here. It's been a lot of time since I've been following your podcast and your content, and it's been so great. And you've added so much value. It's kind of coming full circle now that you've invited me on your podcast. I'm glad to be here.
Yeah, that's awesome. Well, you scaled so rapidly, especially over the last 12 months, owning over 1,000 units right now. And so we want to get into that, but I want to kind of rewind the clock a little bit back in the early days, the little bit younger days. And think back when you first started getting real estate on the brain, right? You probably, read Rich Dad, Poor Dad, and you're like, oh, real estate, that sounds like a good idea. Like, why did you first even start thinking about real estate? What was going on in your life at the time?
Well, back when I had a lot more hair on my head, I was a snot-nosed engineer out of college, and I did machine design, automation. The first employer that I had took me a little bit under his wing, and in our conversations, he said, look, I'm in the high-tech space. It's great. It's cognitively rewarding, but hey, all my money is actually in real estate, and you need to do the same. And so I saved up every penny I had, and I dumped it into these deals where I did all this research and analysis, and the market was never going to go down because this is back in 2007.
Of course.
Yeah. And I was highly leveraged and speculating in new land and planning to build on it. And then once you know it, it all came crashing down, and I was heading towards BK, which I was able to escape from, and foreclosure and settle, and then had to pay debt forgiveness. And so I haven't lost money on a deal since, but I learned a lot through that. And it did humble me. At that point, I escaped back into my career, got 2 master's degrees in business and engineering. And it was a few years later before I decided, look, I'm going to do real estate again. I'm doing my income is high. I've got automation projects with defense, Lockheed, and automotive at Tesla and medical device companies. I'm like, look, I gotta put that in the right spot, not just in stocks, right?
Right. Okay. So you were looking for an investment vehicle at the time. You had some excess income and you wanted to put it in real estate. Now, a lot of people who got burned in 2008, they said, oh, real estate bad, no bueno, and they're out, right? And they kind of threw the whole asset class out the window. And luckily you didn't. How did you change your strategy then after the recession? How did your investing change?
Well, I followed the typical path that, I was like, well, let me look at what's not speculating, what's investing, and what asset classes cash flow and what markets are recession resilient. And I got turned on to hold investing, or the BRRRR method. I didn't know what it was at the time. And I started doing research and analysis, and I started doing in areas like Houston where the market kind of lifted and stabled off. I was like, well, maybe I'll dabble in something there. And so I started I built a team. I read a bunch of books. I run a podcast, and that's ultimately how I learned about you. But at that time, it was purely single family. So I was moonlighting these, and it was working. I was moonlighting these deals, and I was buying, renovating, and pulling money out, finding distressed opportunities, and just rolling into the next. But I'll tell you what, with a 60-hour-a-week job, which I loved and still do, there wasn't much time for a lot of other things. And when I met my wife, I was like, look, I can't moonlight this because I want to marry my wife, right? And so it was really at that point, it was like kind of that breaking moment where I got to choose not to trade off my investment future for my family or my investment future for my hobbies, but just take a break and recalibrate. And it was during that time, I don't know if I was running through Big Bear where we got married in California, or running through the streets of Beijing, but that's when I stumbled, not literally, across your podcast. And that spoke directly to my heart, right? Because it was all the struggles of chasing property managers. And every time I closed on a new deal, it was a challenge, and I couldn't scale. And I was only a limited amount that I could do. And so I realized all of a sudden, I've got to scale, I've got to trade up to multifamily, and I've got to partner up. I can't do it all on my own.
That's a lot of realizations that you got from the podcast all in one place. That's pretty cool. I mean, this is the thing. I just made the same discovery through single family house investing. It is a lot of work. It's very difficult, almost impossible, I'd say, to set it up in a passive way. Unless you achieve a very large scale, which of course is, obviously pull your hair out, as you can clearly see. And so, so you move to multifamily. So that's pretty cool. So you listen to the podcast, you're like, man, multifamily is the way to go. you still wanted to be an active investor in as you were contemplating this. Now, when you got into, so you've done a few houses though, but did your reason for investing in real estate change a little bit? Like in the beginning, it was like, well, I need to put my money somewhere, and this guy said it was a good idea, so that's what I did. And as you were contemplating shifting to multifamily, did your goals change at all, or it's just simply the same thing, but as a matter of scale?
Well, yeah, they did. Because, at the same time I was shifting into getting married, and I was having a little more value for that quality of life. And before it was just, hey, I'm going to work forever. I'm a hard worker. I'll work a full-time job and get 2 master's degrees. It wasn't about focusing on other things. And I mean, I do a lot of adventure sports along the way, but I started seeing a little bit better future and focusing more on, how can I have a better quality on the other side of this engineering career, maybe accelerating retirement. And then on the other side, what will cause me to not lose it all like I did once? What's it recession resilient and asset protected, and how to build a legacy through retirement, right? And I think those are really some of the things that really rang true to me.
So, and Patrick, you actually got your wife involved at a certain point. Can you tell us about how that kind of came up? Was it organic? How did you kind of get her on the same page with you guys and what you were looking to do? Sure.
Yeah. So it wasn't easy, but when she got on board, she got really on board and put together a vision board and everything. But initially, her coming from China, being raised in China, ideas of financial freedom and kind of buying properties with leverage, as opposed to just buying them, let them sit empty. All these things were actually new concepts for her. And her parents we struggle to this very day when we talk about these things. They don't quite comprehend. You work until the government says you stop, right? And then you stop. And so, and then they've all worked, they're all both doctors, they worked forever. So I took her to a number. I knew I needed to get her on board because I have read a bunch of books and listened to podcasts, said you got to bring your family with you. So I took her to a bunch of seminars. And then when I came across Michael Blunt's Ultimate Guide, I said, hey, look, I'm going to go get a 3rd master's degree. You don't have to join me, but I'm going to be at Starbucks on nights and weekends for the next X number of weeks until I'm through this entire thing. And I was like, do you want to be with me or you want to be at home? So she came with me, and we started learning it, and she was listening to the videos. I was taking diligent notes and reviewing them every day. And then I joined the Slack channel, and at that point we actually did do a mentorship program, and it was and through there we actually had some coaching from you, Garrett, as well as Drew Niffen and Bronson, who was not far from where we were at the time. We had heard a lot of data points of this Michael Blunt team and Nighthawk Equity, and they kind of helped out a lot. And we went to an event, started mentorship. She created that vision board, and next thing you know, she's got 80 videos recorded on passive investor education. And we're up on the website. She's got a whole Women at the Cash Flow series, and she's pushing me, right? Instead of me pulling her. And I think it took some time, but she definitely got there.
So you mentioned a few things that are really critical when you first get started. Number one is you gotta believe that this is possible, right? If you don't believe in something, why would you ever take any step in that direction? And you, for some reason, believe that real estate can be used as a vehicle for financial freedom. And I think that's number one. Number two, you got educated, right? You took one of our programs, our courses. That's very important. But then you brought in your wife, right? So that is super important, because you need some kind of accountability partner, which is almost what she was in the beginning, and she was holding you accountable, which is awesome. And then you got her really excited about putting out videos, which is really, really cool. And now you talked about other people involved. So there's a mentor. You talked about Garrett and Bronson and other people around you advising you a little bit as well. And how did you then use all that to kind of get your first deal done?
Yeah, well, it was a long, challenging process, I'll be honest. And, there's a lot of barriers to entry. So we initially started flying, and some of the time she would come with me. I was flying already for the engineering stuff, but now I'm flying also for markets, right? Target markets, the recession resilient ones, the similar ones that I was investing in single family, but now wanting to trade up, trying to meet the brokers and break into the old boys club and buying lunches and dinners, and then underwriting constantly. The Slack channel was very helpful. The mechanics of since you come from an engineering background, I think we resonated on the mechanics of it, and I got the mechanics and the underwriting. And it took a lot of that kind of relationship building And the coach was helpful because, I coming from machine design where every single invention is a one of a kind deal, it takes somebody with experience and wisdom to see through a deal on why things have failed and the numbers are not good enough, right? You've got to have that experience check mark. And so I did it after just bringing deal after deal after deal to various individuals on, hey, what do you think about this? What do you think about that? Here's all the analysis, going back, doing the work, getting it done. Eventually a sponsor was like, hey, let's do a deal together, right? Let's do one.
All right. So a few things. It sounds to me like you actually started analyzing deals as a first thing. And then it sounds like your plan was to bring a live deal to a more senior operator. Was that kind of the track that you're on?
Yeah, I've never, like I said, I'm extremely risk averse, and that's very apparent in the underwriting that I do. It's very low leveraged, and I'm looking for talented people to partner with and trade up, right? And into a more sophisticated team. And I wasn't interested. I had learned that doing it yourself, it can be painful, and you can learn hard lessons along the way. And so I decided not to do that again. And so I was looking for those individuals.
So you said you're conservative, and I would say, knowing a lot of engineers, that is correct. They're very deliberate, very careful, everything, and so this can sometimes get in the way of you doing a transaction. And I found there's a lot of people who say, oh my gosh, I can't get any deal to pencil, and when you look at what they're penciling, they're overly conservative. They're so conservative, in fact, that they'll never, ever going to do a deal because they're so conservative. And then the other extreme is, happy-go-lucky guys or gals. And they're like, this sounds like a good deal. And they don't really do any analysis. They just kind of stumble into it and then possibly make a mistake. How did you overcome that, right? So you being more of the conservative variety, you must have realized at one point that every deal you do is essentially in the gray zone. There's very few deals that are like screaming green light. Like, do me now, because it's a no-brainer, right? I haven't come across any of those deals before. How in your mind, how did you overcome that? How did you justify taking on a level of risk?
Well, it's a really good point. And because, I can, a couple factors, besides having the right team, right? You got to have the right team there that has, decades in the asset management that can execute the business plan. You got to have the right team that's taken full cycle deals. And aside from that, I did probably go through 2 years, 2.5 years, since I originally said, hey, I'm doing multifamily, not doing single family, before the first deal happened, right? So it was a long process for me, but when I start, like you said, the law of the first deal, when it hit, it made it happen. But I think the balance was a combination of finding low leveraged debt. Like right now, I'm doing a 60% loan to value, 40% loan to cost. That equates to like a 67% break-even occupancy. Even in the downturns, that only fell to 80s, right? And so I feel like that's very recession resilient, right? And going into markets where you see not a lot of volatility, I started getting more comfortable the more I penciled with, hey, what is the reality? What might actually happen? I'm not an economist, but I can look at data and suggest that the worst case is we maybe return a little less because we have long-term low interest where you can ride it out. Maybe it's not like the stock market, we're going to lose it all, or like the single family, personally guarantee everything, where they're going to lose it all and cross collateralize and take you down entirely. Each of these individual deals, they'll ride themselves and hold them into their own merit. And I started really kind of getting behind that kind of mentality.
So you came in conservative, and then it sounded like you were coming down this path of, kind of becoming the deal finder, if you will. And you wanted to start bringing deals to GPs, but then you at a certain point pivoted and you became, co-GP in kind of another way. And can you talk about that and what made you kind of switch your decision from just bringing deals into partnerships to something else?
Yeah, well, it was the first deal where I had brought so many deals and showed up consistently with, hey, what do you think about this? What do you think about that? And often it was, here's the deal and here's my list of concerns with it, but what do you think? And I, like Michael, it was a little bit like, well, you should be worried about this, but not that kind of stuff. Eventually, that guy said, hey, why don't you do a deal with me? I've got a deal. I'm too busy. I've got all this stuff. And being drawn into it, kind of adding value, I just wanted to do everything possible. And so I did the due diligence. I helped with the underwriting, the projections, the pro formas. I was on site. I helped with the capital raising, and I'm continuing to help with the deal moving forward, not on like the day-to-day project management level, like I used to be on the single family that lessons, but on the reporting and the making sure these sophisticated people that have had decades of experience are meeting our projections and performance. And so that was a natural fit. And then after that first deal, I became, because I had done so much, they were just like, hey, well, let's do it again. And let's do it again. And
so this is really good. So I want to pause there. So you basically, you were like starting like, I'm going to take this path of the deal finder. And you kept, underwriting deals and bringing them out, getting different perspectives on that. And you were learning skills behind the scenes, asking for help, getting mentors, doing all these things to a point where you actually could add value to an operator in so many different ways. And then you came and brought not just like a deal finding co-GP scenario, but you're able to come in many different ways to them on your first deal, to the point where they were like, you know what? I think it makes sense to partner with this person. And that was the most powerful part. And I think people don't always pay attention to that it's maybe not just one thing. Maybe it's not just finding the deal. Maybe there's other things, that ways you can add value. And the more that you can bring into someone's world and understand maybe what they want or need in a partner, you can kind of get into a position that Patrick was in. Patrick wasn't lucky. He just put in the reps and the work and impressed an operator that was, I think they were fairly established, your first deal, but you came in so hot and heavy with all the skills that you learned through our program, through meeting us and whatever else, that it all clicked. Does that sound about right?
But it also sounds like he struck out a few times with this operator. Yeah. If I heard you say you're bringing him deals, and they're like, no, Patrick, no, Patrick, no, Patrick. All of a sudden they said, yes, Patrick. Right now. So back to Garrett's point though, you must have been, provide them value with something without being a pain in the butt. Right. So how did you eventually get them to say yes to you?
Well, so first of all, you guys are right on. We actually traveled and worked with numerous groups all over the United States. We had toured dozens and dozens of properties, met dozens of brokers multiple times. So there was a ton of pain and anguish. And after a while, it did start to very much wear, right? But it actually, so eventually, it is true. It turns out that in the industry, I'm not scared to do a lot of hard work. And that's exactly what these deals are. And I think that there's some kind of misconception that there's this immediate financial freedom, right? But the reality is, we were working late nights. I would do a 1-hour Zoom call with the sponsor. I'd record the entire thing. And then I would literally, just like I was back in college and grad school again, I would listen to that. I would do every single task in exactly the way it needed to be done so that I could replicate it in the future. And it would show it, presented to him, and he would be like, it's all done. Wow, that's cool. So I figured out where, I guess, he actually needed me. I didn't like push like, hey, take this value. No, it's like, well, what do you need? And I'll do it. And it wasn't easy. I was, late nights and weekends at it, but it worked out in the end.
Yeah. It also, I want to say that I was there for a lot of this ride. And so I was seeing, you were setting up fairly regular calls with me, and we talked through different positioning. You were bringing me like different deals that were way in like the southern part of the country that made no sense with industrial arms to it and stuff like that. Mm-hmm. But it was through all those things and all those reps beneath the surface that no one saw that eventually allowed you to get into this position. So it's really cool to see when you finally got to that point where you got that first deal. I was like, you know what? I'm so happy for Patrick. It's probably like a year after we even sat down for lunch in Scottsdale, and you were still grinding. I mean, you're grinding then, and then it just took a minute to get to that point. And you're a really smart guy, and but I think that resilience is that one factor that you just have to have in this business. Even when I came to Michael and Drew to try to partner with them, I went through a similar process. I brought them a deal, and it took us a year. We were under contract. We ended up not even closing it for a million different reasons. It was one of the most painful experiences ever, but now we've done 8 deals together. So I think the big lesson in this conversation is that is the one component that if you don't have it, you're going to be like, another guy that never did a deal. And this really separates you. It sets you apart. And Patrick, it's so cool to see that you've come through that whole ringer to get now. And then talk about, so you finally got that first deal. What happened after you got through that first deal?
Yeah, so the first deal was a ton of work, and I it was my first time doing an investor deck. First time really, and because I come from an automation robotics background, I had individuals that were entrusting me with millions of dollars, and the teams that I'm working with to build these very high risky, development type things. I was like, well, hey, have you considered real estate? Right? Here's a much lower risk. So once I got my first deal under control, I started having some conversations. I didn't raise much for the first deal, and I'm kind of busy on the operations side, but I said, you know what, healthy business, you need to have a platform, you need to start raising, you need to set up, and I did everything that basically is in the book, is in the ultimate guide. You're supposed to do all this stuff. So I started just having those conversations, and I got a lot of people like, no way. I got a lot of people unexpectedly very interested, right? And so then the next deal was another where I showed up on site. We walked all the units. It was a C to B class. It was much heavier lift, more complex, a lot more to do on that side, rather than the first one was like 2009 asset. So that was kind of really getting my feet dirty, literally, kind of in what the heavier lifts can be like. And then I kind of doubled what I raised on that one, did a ton of work. And then the third one came along, overlapping the second one, but we didn't want to tell our investors about it because we were like, well, we haven't closed it on the second one. And we don't want to distract people and then have another conversation, which one's better. So we just kind of were like, well, let's go see if it's a good deal, right? So under cover of darkness, I flew from Hawaii, right? And landed in Dallas. And we did this like super skeleton crew secret, like walk through, we negotiated it and we got through and we're like, all right, looks like this is a good deal. So we then hit that one. And then each time I kind of doubled what I was bringing to the table from the investor side. And I was able to add more and more and take on more and more responsibilities on the operations side. And actually, that deal was the first one where I was signed on as a KP. So now I've a key principal now on almost 200 million in commercial real estate, which is another kind of point, which I think I can also help bring experience now to the table.
It's a snowball. Look at this snowball that just
3 deals, and just 3 deals. Yeah. And you didn't even do them on your own. Like it's staggering. Yeah. It really is.
Mm-hmm. And so at this point, we're on to, I think by the end of the quarter, we should be north of 3,000 units. And there's 5 states involved there. And north of, I think 250 in holdings and general partnership ownership, none of that. So none of that would be, I'm also invested in every deal, obviously, because you have to be to really make the loans happen. And so that means you're in much more so than the LPs. I don't think the LPs sometimes get that when you sign on a loan. Yeah, it's your neck, right? So you're on it.
Yeah. So the key thing is, like, it sounds like I say this, that my mentor actually told me this, that the millions are made in the valley, right? So you had this like long valley, this deep valley of learning and striking out and getting beat up, and then now you're on the other side. And that's where your millions were actually made, in that valley. And now things picked up even faster because you had all these skills now that you could bring to the table. One of the skills I think that is really cool that you've been able to bring out is a lot of your investors that you brought into your deals. You actually, you run 506Cs, and you're actually able to reach out online, do some online marketing and build relationships with them that way. How did you get that engine going? Can you talk a little bit about that?
Yeah, well, the majority of the deals that I see out there actually, so the 506B syndication, which means that you have to use just friends and family, or substantive pre-existing relationships, and you kind of go with a very wide range of investment amounts. And I have been working kind of at a level with in my life with much larger investments, more on the tech side. So I actually felt more comfortable with people that classified as accredited investors, and I felt more comfortable at 100,000 minimums. So that's actually how my deals have been so far, and my average investment is actually north of 200. So I felt a little more comfortable there. One of the side products of that is that it makes sure that the net worth of the individuals is high compared to the investment, right? Also means that you can put your deals online. So it is true. I put together some landing pages, blasted out emails to my network, but then we put together some Facebook ads, and people that were interested kind of filtered through. And we have to do these calls, make sure you're a good fit, and see, because you still need that. Are they sophisticated? You still need that. Do you have a relationship with them? Those things don't go away. It's just a matter that you can be forward facing, and you can tell people about what you're doing if you're in a 506c offering. And I think that's a powerful thing. And I'm happy that I chose to go that route.
What's y'all's biggest challenge right now as you're scaling the company?
So right now we're doing a lot of, so I'm getting a lot of, hey, if you're, occasionally I'll get these investors that, if you're really doing all these deals, and how come there's not much information about you, right? So now I'm on Michael's podcast, right? Because I tend to be the engineering type, and I just keep my head really close to the grinding stone, and I just get all the work done. And so I just recently put together a book, and I got that out, and with one of actually think Michael's colleagues, and that went out. So I'm getting my name out there. I was just published in Forbes yesterday on an article I did, and I'm starting to get in more and more, get my name out there, so that people start to understand or start to see, if they Google me, like, yeah, this guy, he's, well thought of, he's talked about, and these people like you know me. And so having these conversations is probably the biggest roadblock to our scaling, is just becoming more well-known, I guess. And a little unnatural for an engineer, right? That tends to just get the work done, and that's good enough, right? To actually have to put myself out there and get some kind of testament of that I'm a little bit of a figure in the space.
Is that a little bit of an unnatural act for you? Or did you have to overcome some mind blocks to do that?
Yeah. I had my third cup of coffee this morning, just getting ready for this podcast. So
so it stresses you out a little bit, and it stresses almost everyone out. It stressed me out in the beginning as well, because you feel like you're not really an expert, or you feel like you're not good enough, or whatever you come up in your brain. And I can tell you, it gets easier over time. And it gets easier as you get reactions off content you're putting out. When people say, hey, Patrick, this is really great, thank you for that. You're like, oh my gosh, that was an awful video, And so when you get people reacting to that, that's, I think, when you start getting affirmed more when you do that. And it's super encouraging. Now I ask you a question though. What's your plan for quitting your job, Patrick?
Well, see, you underestimate what a geek I am, right? I think to a little extent, and we've had this conversation, but I still, like I said, machine design, automation, and robotics is very cognitively rewarding. And while I'm doing really awesome things in multifamily, I'm still very much enjoying the contract work I'm doing on the machine design side. And when multifamily slowed down, I was able to kind of dive in during COVID and do a bunch of COVID assembly test kits. And I think that was a really cool thing, that now I've just been a lot of replication of that stuff, and it kind of contribute in that way. It is true that while it's cognitively rewarding, it's not going to offer the stability and the security of my financial future, which is literally the words that I hear from Dave, my old boss, back in 2007. So, I'm happy to continue both, and right now it's working great.
Yeah, that's awesome. And this is the thing is, we talk about financial freedom a lot, and that means different things to different people. And it doesn't mean you have to quit your job. It can mean that, but it doesn't have to, which means that you can continue working if you want to, or you can stop working for a time if you don't. And the point is, it really gives you freedom as well. So final parting advice, Patrick, someone watching, listening to this goes, man, I want what Patrick's done. What's your parting guidance for people who want to do what you've done?
Well, I think that what I've told numerous people is, it wasn't to get into the space, you're going to need to partner up. Had I known that earlier on, and I didn't try to do my own deals and focus on doing everything all on myself earlier, I believe I could have partnered up sooner. I could have learned up, meaning with people more experienced. I could have started learning from them, and they would have helped by me grinding it out, essentially doing what they would have helped pull me along at a much faster rate. And I think that's evident in kind of the plateau and then the growth. And I'd say that the difference between partnering up and maybe what actually worked for me was, I see a lot of people like, oh, I'm just sending these deals to these people. Well, I did that for a long time. Turns out it wasn't the deal that they needed. It was all these other things that gave that sponsor back his time for his family, friends, or additional growth, right? The things that he wasn't passionate about. So I think it was really finding where my skills and alignment and passion kind of fit, and finding that where that's a complementing need, right? And so there was a lot of different connections made until that was found, and the networking made that happen. But I think that's probably what I would say.
Yeah, it's great advice, a great story, Patrick. How can people connect with you and find out more?
Well, is it okay if I offer a free gift to your listeners?
Go ahead.
Yeah. So we did just, my wife and I work on a book to tell our story because we haven't really got it out there. So the first time we did that, we did put together a book. It's called Persistence, Pivots, and Game Changers, Turning Challenges into Opportunities. I did a chapter in here, and it's my story. And I'd be happy to, if you go to my website, you're going to see the book right there, investonmainstreet.com. I'd be happy to give this book signed copy to any of your listeners that want to set up a call and talk about their goals and see if I can offer any value to them.
Sounds good. We'll put that in the show notes. Patrick, it's been great to have you on the show. Thanks so much.
All right. Thank you, Michael and Garrett.